President Trump's tariffs are now creating uncertainty across the global economy.
It's the president declaring a national emergency and putting into place a new set of sweeping tariffs on goods from nearly every country that trades with the United States.
Wolf, markets are tumbling as investors are really digesting worse than expected tariffs.
The Dow sank more than 1,000 points at Thursday's opening, digesting the Trump administration's sweeping tariff plan.
Take a deep breath and just take a look at this beautiful red image. Doesn't it look like some old Orthodox stained glass? How does it make you feel, though? How's your portfolio doing? Are you down? Are you up? Well, if you're one of these 4 Redditors, you actually outsmarted the market and managed to exponentially grow your portfolio in a time where most of us are down 3 or 5 or 10% or more. These 4 Redditors specifically made some plays that yielded them 100 to 1,000% in the stock market just in the past couple of days. So we're going to break it down right here at Gigastonks. I want to remind you it's not financial advice. We're going to go ahead and meet the degenerates. So first up, we have Ding Dong 6969. He's been in WallStreetBets for just a month. It's mostly been stock buys for him. He's kind of new to options. Second up, we also have a total newbie, No Pomegranate 9234. This was his first post, so I'm kind of suspicious. Where did this guy come from? Third up, we have Bandit Cleaner 2. He's a crypto enthusiast as well. Finally, we have Opening Meaning 1564. Only has 2 WallStreetBet posts. He's a self-diagnosed gambler with a gambling problem, and he owns a Jeep. It's kind of fun to stalk these profiles and see what else they're into. $13,000 into $34,000, $5,000 into $25K, $100 into $9K. And the Balls of Steel award goes to our final contestant here, who turned $53K into $142,000, so almost 6 figures in a day. All 4 of these strategies were a little bit different, but they were very similar. I'll go over the 2 things that they had in common. The first thing that they had in common was that they used a put option. A put is essentially an option contract that gives the holder, in this case, each of these 4 Redditors, the right to sell a stock at a strike price. So in a bear market where a certain stock may be dropping a lot, if you have the right to sell it at a really high price in comparison what the price was last week or last month, you end up doing really, really well when the stock drops. You actually want it to drop because the more it drops, the more your put option is worth, because an option contract is leveraged 100 times. Time and volatility and everything can change things, but if a stock drops $10, your option contract should go up in value about $1,000. So it's a great way to get completely wiped out of your portfolio or make millions from nothing. The second thing that all of them had in common was tariffs. This isn't really a video to debate about the effectiveness of tariffs long term for the economy, but it is unarguable that they tanked the market today and so far over the past month or so. A tariff is essentially a tax imposed by one country, in this case, the United States, on the goods and services imported from another country. Now, there's a long list that Donald Trump has imposed these tariffs against. The tariffs were mostly reciprocal. So, for example, Canada or France or China or whoever might have been charging us 25% for wine or rice or cars or whatever. And Trump decided to say, you know what, if you're charging us for that, we're going to charge you for something very similar. Now, in the short term, it's been absolutely terrible for the market. As you saw earlier, it is a complete bloodbath out there. Everything is down. Even the safe things, like the Dow and the S&P, are down 8, 10, 12% from their all-time highs a few months ago. But we're going to look now at the gains that some of the Redditors here made. So we'll start with Ding Dong 6969. Firstly, what a heck of a name. Ding Dong entered the market with some $568 puts. Now, he bought sometime on April 2nd when the price of SPY was actually around 565. So that means that he was in the money. If you don't know what that means, in the money means that he was at a spot where he was a little bit safer. The stock would have had to significantly raise for him to do poorly. He was in a spot where if it dropped just a little bit, he was going to do pretty well. In hopes that it would go down, he put 13,000 in right about here, and he was hoping that his gains would be pretty significant. Now we're going to look at how Ding Dong, our friend here, actually did. So he timed the puts perfectly. He sold them. He locked in a $21,000 profit, turning $13,000 into $34,000. There's the executed trades right there on Robinhood. So they expired on April 4th, and he decided to sell them on April 3rd, which I think was a great call. This guy, my hunch is that he did not know what he was doing, because he wrote, "Thank you all that helped me this regard out." So my hunch is that he just has like a double-digit IQ and somehow picked something that worked for him, but now he's quitting his job. and he's going to have a free vacation. We'll see how this turns out for our buddy Ding Dong in the long run. The responses have been pretty much just memes. So take a look at these. I think it's hilarious. Trump with the selfie with the red phone in front of the Red Sea that he has kind of created short term. And then JD Vance here asking if we've thanked him yet. Next up, we have No Pomegranate at 92.34. He had a very different strategy, but it paid out similarly well. Instead of investing $13,000 in the money puts expiring on the 4th, he got out of the money puts, put less money in, $5,000 on $540 strike price puts on SPY expiring on April 8th. He bought them on April 2nd. So you can see here that his percentage gain was actually higher. He did a 5x of his money instead of a 3x. And that's because the out of the money play here, basically meaning that 540 strike price on SPY was a little bit riskier, because if SPY didn't drop all the way down below 540 or close to it, his puts would have been completely worthless. The comments on Pomegranate's play were kind of mixed. Seriously though, what if business were like F the tariffs and never did it? I'd have to put in extra work behind the Wendy's. That's pretty funny. That's great. Your 20K is now worth 11,000, 10,000, 9,000. So what Food Inc. here is referring to is the implied volatility and the time decay of put options, which I'll definitely cover in another video. But Pomegranate sold these at the perfect time, made plenty of money. We're now going to look at the third trade here made by Bandit Cleaner 2. This is a really interesting play because he didn't just straight up buy puts. He did buy puts at a $559 strike price, but then he actually shorted puts at a $558 strike price, meaning that he sold something he didn't even have. At some point, he knew that he might end up needing to exercise those puts to somebody else. We're going to focus here at the bottom where the profit is made. You can see essentially the long and short of it is he was able to sell SPY shares at 559 and then buy them right back at 545 instead of at 558. So he really lucked out. We're going to explore quickly what it means to exercise puts. If you own an option, this image here is for calls or puts. If you exercise a put option, it means that you have the right to sell a stock at a certain strike price. Our friend Bandit Cleaner had puts for SPY to sell at 559. Things took an interesting turn because he decided to exercise his options, meaning that someone randomly out there on possibly the other side of the world who had decided to short SPY at a 559 put price had to end up buying that put from him. They were essentially forced to buy it from him. Then on the other end of the spectrum, he had shorted or sold some $558 strike prices, and nobody had ever tried to exercise them back to him. He did not get assigned, which allowed him to, instead of having to sell for 559 and buy for 558, he was able to sell for 559 and buy back at the current price, which was 545 when he did it. In simple terms, he was expecting to make $1 per share. Pin risk was very high, but it worked out in his favor, and he ended up making 13 per share. If this doesn't make total sense to you, that is okay. It doesn't make total sense over here to Crux Delt 4. I have no clue as to how this works, but good for you, I guess. Someone else said, bravo, no Wendy's shift for you. A lot of Wendy's talk in the WallStreetBets community on a lot of these posts today, I'm noticing. So I think it's kind of on everybody's mind with tariffs and the bloodbath. Everyone is probably applying to work at Wendy's or behind the Wendy's right now. We're going to look really quickly at the final trade that we've got lined up today. Opening meaning 1564. He may have the most boring profile picture of the four of them, but he actually has the most exciting win. Very straightforward. He bought SPY puts with a $558 strike price, which is kind of in the middle today. Remember, the first one was $568, the second one was $548, the third one was the $558 and $559, kind of shorting and doing a put spread, and this one is just straight up $558 puts. He put $53,000 in, which I think is absolutely insane. He purchased them on the second, and they expired on the third. So this was a really ballsy move. He did end up profiting $89,000 and turning the 53 into 142. So the responses were mostly memes, and they say memes are worth 1,000 words. Now we're going to shift to the takeaways. So what can we take away if we are a young aspiring gambler or investor from today's wins? The first thing is that puts are generally a great hedge or a gamble in a bear market. Puts sometimes work and sometimes don't. They're very risky because they're leveraged so much in their options. But in a bear market, in a volatile market like today's, puts can be really, really lucrative and can pay a lot more than you put in. Again, that is not financial advice, but that is the reality. Some people are losing their mortgages and net worths to puts, and other people are creating them out of thin air. The second thing is that tariffs, at least in the short term, are going to hurt the national economy. They may not hurt us tomorrow, they may not hurt us in 10 years, but generally over the next coming weeks and months and years, I do expect there to be a little bit more hardship with all of the tariffs ramping up. And then the third thing is that no matter the market, there are winners and there are losers. And what I mean by that is no matter how strong of a bear or a bull sentiment there is, there's always somebody that's made just the perfect play and now they're on Lamborghini.com and they're ordering their new luxury vehicle. And there's somebody else that just made the most boneheaded, stupid play and is now behind the Wendy's offering the most obscene services for $20. And that about wraps up the Gigastonks analysis from today. Thank you for watching to the end. If you're new here, definitely hit that subscribe button. We're going to be doing a lot more cool analysis like this coming in the coming weeks and months with speculative investing in general. And go ahead and comment below, what positions have you been playing recently? Have you lost a lot of money? Have you made a lot of money? I'd really like to hear from you. So until next time, have a great day.